The New York Stock Exchange being open has nothing to do whether the Washington Post is getting more valuable over a 5 or 10 year period. And what we want to do is be right on the business. If we're right on the business, the market will take care of itself. And if the stock exchange closes on Saturday and Sunday, you know, and I don't break out in highs, so if it closes for a couple of years and the business does well, we'll do very well.
That was Warren Buffett many years ago talking about a philosophy that both makes him the greatest investor of all time, but also explains why retail investors are net losers in the stock market. This philosophy he talks about is one that most of us might think we're capable of following, but in reality, if it actually came to terms, I don't know if many retail investors would be comfortable holding stocks if they couldn't see the stock price of that company every single day of the week. But on this channel, I've always been 100% transparent, 100% truthful with you. And in today's video, these are two companies that, in my personal opinion, are two of the most undervalued companies in the entire stock market when I look at the valuation and also the fundamentals. But like Warren Buffett said, sometimes it can take some time. I believe I'm buying the fundamentals of these companies at an extremely attractive valuation, but it might take the market some time to take care of itself and make me money through capital appreciation. But if the stock market were to close for the next 5 years, I can honestly say I would be comfortable owning my percentage of these companies' revenues, profits, and growth for the next 5 years. I would be comfortable not looking at the stock price of these two companies. And I think that's what makes them such a great investment. Now, in saying that, I'm not a financial advisor. Everything I say today is my personal opinion, and I'm not guaranteed to be right about anything I say. If you are new here or returning and not yet subscribed, please subscribe down below. We have one of the fastest growing stock market YouTube channels on this platform. I'm incredibly blessed to be able to wake up and do this every single day. But without further ado, let's go ahead and jump into the first stock. The first company I want to talk about is technically a penny stock, but don't let me lose you. Give me a chance with this one. I do believe this is truly one of the very rare diamonds in the rough you can find in penny stock land. This is a company that trades for $55 million or $3.40. In year to date, it has not been pretty. Down 33%. Over the past year, down 23%, and over the past 5 years, down 62%. And since the peak of the market in 2021, Flux Power is down 82%. So you might look at that stock price performance and say, why would I invest in this company? Well, let me explain this to you. Let me explain the fundamentals. Remember, this is a $55 million company. For starters, if you look at Yahoo Finance, you can see that over the last 12 months, this company has done $64 million of revenue. You don't have to be a mathematician to see that that means the company did more revenue than their current market cap over the last 12 months, which is crazy to think about, but revenues aren't everything. Let's talk about profitability and what the business does. So the company actually delivers batteries, lithium-ion batteries, to the material handling sector. So think forklifts, lift trucks, warehouse robotics. They even have some business segments in stationary energy storage for solar-powered electric vehicle charging stations. And they also sell batteries to airlines for ground support equipment. Specifically, Delta Airlines has been a big customer for them. And in both of these big sectors, material handling and ground support equipment, these are very young industries that Flux Power is already a household name in. Don't believe me? I don't blame you because it's a $55 million company, but let me show you the customer list that Flux Power has. You can see Frito-Lay, Pepsi, Costco, Procter & Gamble, Walmart, Subaru, Caterpillar, Nissan, FedEx, Beam Global, Delta Airlines, Air Canada, United Airlines. These are Flux Power's customers. A $55 million company has Fortune 100 customers. And that's crazy in and of itself, but they've actually been able to raise prices on these customers. They have long-term relationships with these customers, which means they have a significant competitive advantage on anybody else that wants to enter this space. Flux Power is in an industry that needs lithium-ion batteries today. A lot of these other battery supplying companies are entering industries and fields that don't really need the batteries right now, where demand isn't there, but demand has not been an issue for Flux Power. You can see Flux Power has more than 23,000 battery packs that it has shipped throughout North America already. And you can see based on the chart on the screen here, the customers that they do acquire stick with them. Flux Power does a great job, and these companies are seeking long-term relationships with their battery suppliers, which in this case is Flux Power. Every single customer that Flux Power has signed on, at least that I know of, has continued to order more and more and more batteries from the company. I mean, just look at the light blue part of this bar chart. How back in 2017, this customer gave them, what, $1 million of revenue, maybe? But in 2023, that same customer gave them $45 million of revenue. This is a trend that is likely to continue. Now, I want to say this doesn't come without its issues. Flux Power is not yet profitable, but I did just meet with the CEO and CFO of the company personally. I actually made a video about it to my paid monthly members. You get to support me. You know, why would you not want to do that? And also get access to actual real alpha in the stock market. I give my viewers and audience real alpha, unlike a lot of these other YouTubers out there. I think my membership pays for itself. So if you're interested in joining that, hit my Patreon link in the pinned comment or hit the join button located right next to the subscribe button. If you want to invest in this company, you have to see that video where I talk about my meeting with the CFO and CEO of this company. Anyways, according to them, this year is going to be the first ever negative revenue growth year in the company's history. However, they expect that they will return to growth and significant growth already next year. They feel like things are already bottoming. And if you followed economics at all, macroeconomics at all, you would know that the manufacturing and the goods sector of our economy has been in recession, which means that a lot of these companies that Flux Power supplies batteries to they've delayed their orders to Flux Power because business hasn't been as good in the material handling sector. But at some point in the future, the rolling recession that's rolling through the goods sector of our economy right now will eventually turn into a rolling recovery. And when that happens, that's going to supplement Flux Power's revenue growth like crazy. The other thing that they mentioned is they're actually hiring a real-life sales team. When the new CFO came on board, they only had 2 or 3 salespeople, and it really wasn't all that impressive. They're signing on and employing many more salespersons. They're getting into adjacent markets. They've submitted bids to the Department of Defense, for example, for batteries. And, you know, whether it's the material handling sector, ground support equipment, stationary energy storage, whatever they're doing with the Department of Defense, it's a great revenue opportunity, and it's still a very young industry. I'm fortunate enough to get different research reports from Wall Street firms sent to my inbox. I'll throw up on the screen right now H.C. Wainwright's revenue projection for this company 10 years from today, so in 2034. Just look at that number and tell me that this company is going to still be trading for $55 million. I'll also throw up on the screen my price target for this company. My full price target spreadsheet and how I come up with my price targets is made available to my paid monthly members as well, if you want to see how I get to these numbers. But you can see that over the next 10 years, if the stock market was closed, I think the business fundamentals and industry trends are so beneficial and favorable to Flux Power that I think the share price will be close to $200 a share 10 years from today compared to what, $3 today? And you have to remember, Flux Power being a small cap company has been lumped into this group of small caps, the Russell 2000, or even smaller companies than that have significantly underperformed the rest of the markets over the last 4 to 5 plus years because they have been killed by higher interest rates. 40 to 50% of the debt in the Russell 2000 is floating rate, meaning if interest rates at the Federal Reserve go up, the interest rates on this debt also go up. So increases in the federal funds rate have actually made it much more challenging to grow as a small company, but Flux Power doesn't really need it. All they have on their balance sheet is a few lines of credit that they continuously refresh. When they make sales, they refresh the line of credit and then draw down on the line of credit again to get their raw materials and whatever else they need to sell that battery. And again, once that battery does get sold, they just repay the line of credit. Once this company does achieve cash flow positivity or profitability, they're not going to have the need for debt to grow. They're going to be able to pay off these lines of credit completely and say goodbye to them if they need to. And that's what the CFO told me. He said 2 quarters from now, he believes the company will be cash flow positive and profitable. So although this company isn't profitable right now, in the next 6 months, it will be. And I am extremely confident in saying that because I've studied this management team for years now. Whenever I look at a potential investment, I look at it for years and their history and the different projections and guidance they've given and how they've executed on that projection or guidance. And Flux Power has done an amazing job at doing so. Now, the last thing with this company is there are only 16.68 million shares outstanding. If I could get my hands on all of them, I would. Unfortunately, I don't have that type of money yet. Maybe someday. But the concern with a lot of investors when they look at Flux Power is dilution, because every retail investor has been there. They've invested in a smaller company who just dilutes them to oblivion. Then they reverse split their stock and dilute some more. I can tell you, by speaking with the CEO and CFO personally, they have zero intention of diluting shareholders. They're completely happy only having 16.68 million shares outstanding, and this is simply because they don't need to dilute. Again, this is a very healthy business that is growing and fortunately is probably bottoming and is probably having some of its worst of times it'll have over the next decade. That's happening today, which is giving us a tremendous buying opportunity, in my personal opinion. And then you consider the fact that they can start leveraging their customer base to sign on new customers and how strong their current customer base is. I mean, this is so exciting to me, and it makes no sense to me that this company is trading at $55 million, $52 million actually. It makes zero sense to me. So Flux Power is kind of my sleeper pick for the next 5 to 10 years. If the stock market did close, I can honestly say, like I've said before, I would be comfortable with that. I would be comfortable owning my percentage of revenues and profits and growth of the company. And hopefully I can continue to buy more of this stock for a cheap valuation and really build up my holdings, because I think this is a once-in-a-lifetime opportunity. Again, I want to reiterate, though, I'm not a financial advisor. This is just my opinion. I've had incredible success in the past, but it does not guarantee I'm going to be successful in the future. So take this all with a grain of salt. And just because an investment makes sense for me doesn't mean it makes sense for you. All right, stock number 2 is PayPal. It's not that sexy, but it's extremely undervalued. And give me a chance here. I know some of you will see PayPal and you'll sign off, but this is a $61 billion company. The forward PE ratio on this company is basically a 12 or a 13, depending on what numbers and inputs you use. Historically, PayPal is traded at a PE ratio of 30 to 35, and PayPal has been no exception to the fallout post-pandemic, post-great virus crisis, as I like to call it. Since July of 2021, PayPal stock is down 81%. There are numerous reasons for this, but the important thing to note is those reasons are in the past, and I think PayPal has corrected a lot of these mistakes and issues at the company. For one, PayPal tried to get way too political, and anytime a company gets way too political, investors sell out because they don't want to have to deal with political risk along with all of the other risks that come alongside investing into a company naturally. You also have the fact that during the great virus crisis, PayPal's business model was one of the best in the world with everything moving digital and online. Any sort of online merchant or checkout payment system had a great business model when we think back to 2020 and 2021. Now, people believe that it's no longer a good business model, but I don't think so. You see, a lot of PayPal's problem is also the goods recession that our economy has been going through. This has significantly slowed down PayPal's revenue growth, and it makes sense. People are returning to the real world, so they're spending less online than they were during the great virus crisis. But also, just as a whole, people are spending less on goods and more on services. Generally, when you check out with PayPal, you're purchasing some sort of good, whether it be at Walmart, Scheels, you name it, whatever storefront you want, you're purchasing a good. And if we have a rolling recession rolling through the goods sector of our economy, obviously a checkout provider like PayPal is going to feel some pain. Now, in saying this, despite all of those problems and all of those struggles and all of those headwinds for the company, they still grew revenues at 8%. And they grew profits at much more than 8%. And looking forward, according to my personal estimates, I think PayPal is going to return to 10% growth either this year or early next year. And then from there, I think they're actually going to continue to increase that year-over-year revenue growth number to 11%, 12%, 13%, maybe even up to 15%. It remains to be seen how well this ad business does. PayPal is planning an ad business using data on its millions of shoppers. I would encourage everybody to do your research into this. This is a huge opportunity for PayPal. And, it's difficult to really put a scope on how big or how many revenues this could bring to the company or how many profits this could bring to the company, but it could be absolutely massive. PayPal has more data on online shoppers than any other company out there. And PayPal has really never leveraged that data before. And this new management team, who's only been here less than a year, far less than a year, has already outperformed expectations and overachieved expectations. And I think they're going to continue to do so. They really, really get it. Now, if you've been following along with my channel, you would know that I've also been buying Tesla stock. And I want to make this note. A few months ago, I made a video talking about Tesla, and the comments were, you will get yourself killed. You're flushing money down the toilet. Huge warning signs. And, most of them were saying the stock is going to drop to $120. Another one. This stock is going to hit $110 to $120. I think this is the funniest thing in the world when people think they know where a stock is going to trade. What I do is I buy companies that are cheap and undervalued in my personal opinion, and I don't let anybody else tell me what my company should be valued at. And in fact, it's actually kind of advantageous to be a stock market influencer because, as I say here, it gives me a significant edge because I get to see other investors' irrationality in real time. These people say, oh, you're wasting your money. You're throwing your money into the fire. You're flushing it down the toilet simply because Tesla stock was down. That was their only thesis. They didn't have any fundamentals to back that viewpoint. They didn't have any fundamentals whatsoever. They were investing with their emotions, and guess what? It cost them, and it benefited me when everybody else was getting bearish on Tesla stock. I view PayPal in a very similar way. I'm starting to get very similar comments that I'm flushing my money down the toilet. This is a quote-unquote dead business. That's the worst argument ever, considering the company's growing revenues at 10% plus and profits at an even greater clip. That's just a stupid argument that I don't know. I'm sure there'll be somebody in the comment section down below that says it, and it's just not true whatsoever. The reason people are against PayPal is because the stock has been down 80% over the past 3 years. That's it. They can't point to the fundamentals of PayPal and say, this is a dying company. They can't truthfully say that. They can't point to the fundamentals of the company and say that the fundamentals are getting worse. Because if anything, they are getting much better. And we're already seeing that. We've seen that in the results of last quarter when the management team overachieved. They had a double beat on revenue and profits. And again, even if this takes years to play out, I'm entirely comfortable holding my shares of PayPal at this current valuation if the stock market were to close for the next 5 years. I would say I'm excited to own my percentage of PayPal's revenue, profits, and growth over the next 5 to 10 years if the stock market were to close. But the fact of the matter is, this is another once-in-a-lifetime opportunity, in my personal opinion. And whenever you get these sorts of mismatches with valuation and fundamentals, Wall Street always eventually has a, ooh, hello moment, where they realize, we have mispriced PayPal terribly. And even if it doesn't happen, with the fundamentals of PayPal, I really think the downside by owning the stock is really limited. Most of the fallout in the stock has already happened. And even if we go into a recession or the stock market as a whole goes into bear market, I think PayPal is going to outperform because a lot of the fallout has already taken place. And, I say that actually hoping that PayPal does fall further. That's the way I think about things. If I buy into a stock, I want it to fall further so I can buy more of that same stock for an even cheaper valuation. I know that's like backwards in a lot of people's heads, but to be a successful investor, that's the way you have to think about it. But as PayPal continues to head lower, I plan to load up on PayPal call options in as many shares as I possibly can short term. If you want access to my buy and sell alerts, I do share those with my membership. So again, hit the Patreon link down below, or hit the join button located right next to the subscribe button. I also have a 100% refund policy if for some reason you don't find value, but I have yet to have to refund anybody, so you should let that speak for itself. I mean, I say this, and I mean it. I provide some real alpha in the stock market. I meet with company executives. I meet with industry leaders, and I share that information with the people that support me monthly. I'm entirely self-funded. I'm entirely independent, and your support means a lot to me. But yeah, I'll throw it up on the screen, and this is using very conservative numbers, actually. I think the fair value for PayPal right now is around $120 per share. And I think by 2025, the fair value is going to be $220 per share or something like that. I'm just thinking off the top of my head. I'm actually not looking at the spreadsheet. I'm going to put it in there post-production. But all that means is as long as PayPal stock trades for less than that, I'm going to be a happy buyer. And the lower it goes, the more excited I get to own the company. And if the stock market was closed for 5 years, I would be comfortable with it. I would be. But with that, I'm going to end this video here. Let me know down in the comment section below another stock that you think I should look at that you believe is tremendously undervalued. I've done hours of research into these two companies, and I'm as confident as I've ever been in any stock I've ever owned with these two. Again, it doesn't guarantee I'm going to be right or succeed with these investments, although my confidence is pretty high. I'm not a financial advisor. Again, if you're new here or returning, not yet subscribed, please subscribe down below. But with that, have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.